Everyone, welcome to another awesome episode on the show. I'm super excited. I think today is the first show that we're doing, live face to face. I have Tal Abuloff on the show, associate at Growth Ventures. I've actually wanted to interview Tal for a long time. Probably I reached out to the person who's in charge of the PR at Grove about like 6 months ago, maybe more than that.
I think it was more, yeah.
More than that. And basically, and here we go. We finally have a chance to do this. Tal, how are you doing?
I'm doing great. Thank you so much.
Yes. Let me just put the microphone
Okay.
a little bit next to you so everyone can hear you. So, Tal, you're an impressive individual. You started you studied at Harvard Law School, and I think this is Grove Ventures is like your first big official role. Is that true?
Yeah, I think in a way it is true. Before I joined Harvard Law School and Grove, I used to clerk for the Supreme Court of Israel, which was also it was also very big, but not, I guess, not a real job in a way that in Israel you need to complete a clerkship as part of your career. So this is, I guess, the first grown up role in a way.
And how has it been? How has it been? Stressful, or do you find yourself at home?
No, I think it's the first time that I actually feel like I found my purpose in as far as career goes. I had a lot of I did a lot of different I did a lot of different positions throughout the years. I used to work in a startup company. I used to work for a law firm and then the Supreme Court, and all this time I had this question of like, is this it? Where do I land? And what do I do when I grow up? And I think ever since I joined Grove, I kind of settled in my
Natural habitat, we'll
yeah.
call it.
Mm-hmm.
So listen, so when you joined Grove, so what was that? 1 year ago?
A year and a half.
Oh yeah, a year and a half ago. So basically, a year and a half ago, the tech, bubble was booming.
Mm-hmm.
Been seeing company startups raising funds in a pace that we've never seen before. Maybe in the .com area, the 2000s.
Yeah.
And now, 1 year later, we're seeing that the market is making a strong correction, a really aggressive correction, especially with early stage startups, right?
Mm-hmm.
How, like, what's your take on that? Like, because you joined a venture fund while there was the bubble, and now there's not as many investments going on. How does that affect your work?
Yeah, I think we all feel it. I think we all feel it in the venture capital scene in Israel. When I first started, I remember there was this. We saw a lot of deals that were getting closed like very quickly. We didn't have as much like the luxury to dive deep into markets and like to ask all the questions that we usually do, and we had a very specific time frame to decide are we going to invest or not. And I think now it's a bit more relaxed.
Mm-hmm.
Grow Ventures was we had a lot of luck in the way that we raised our third fund in December 22, like more or less when I joined the fund. So we weren't personally affected by it. We have a lot of capital to spend, but we do feel like the general ecosystem has calmed down a bit. It's a bit more relaxed. Having said that, we still see a lot of deals happening, a lot of excellent entrepreneurs building amazing stuff. So I wouldn't say we're at a standstill, but there's definitely a difference.
Mm-hmm. Something that's really interesting to me is, I've been involved in this industry for a while, and I think, as a media persona, I have direct access to both worlds, right? I understand the VCs. I talk to VCs. VCs refer clients to me, to our agency, and I also work with clients, with entrepreneurs directly. So basically what people have been telling me is that in 2000 in the craziness of 21 22, the entrepreneurs had all the leverage. They would tell a VC, this is the deal, send me the term sheet, you have 24 hours, we're closing our round now, and the VCs, there was a lot of FOMO going on.
Yeah,
And now VCs have time to actually say, hold on a sec.
exactly.
Let me research the market. Let me see, show me some examples that this, idea, if it's a seed startup, is actually relevant, has the potential and everything. Do you feel like there is more emphasis on analysis and on doing research? And do you feel that there is less stress in the office to actually make quick decisions?
Okay, so that's a complicated question. I think it was always in Grow Ventures DNA to do a very thorough due diligence process. We never skipped any steps. We always dive deep into our analysis. We always interviewed a lot of people before making the decision. We always built a thesis surrounding the investment before investing. So it's a yes and no, I guess. In a way, we do have more time. It's a bit more relaxed. I do feel like the entrepreneurs choose and choose to wait for the right investor, and not just make an opportunistic rounds. But I wouldn't say that we're not stressed or not completely relaxed. We want to make deals done, and we want to do it in a proper time frame. We don't want to exhaust our founders.
Mm-hmm.
So we have our own framework to do stuff, and we pretty much stick to it.
Mm-hmm. So, you mentioned thesis. You said about having a thesis for everything. So this is actually something that I think you're going to bring a lot of value to this next question, right?
Yeah.
So when investors talk about thesis, if they're hedge fund managers, I can understand that, right? Their thesis, if you take a Bill Ackman and he's saying, I'm a value investor, I'm an activist investor, this is my thesis. But then if we kind of translate that into the VC world, it gets a bit more complicated, right? Because the time you need to spend with each one of those investments is much longer. The horizon is much longer. There's so many different elements to play. The investment is not liquid, right? You can't, unless there's secondary, and now nobody's really talking about secondaries anymore. But until that, until there's an IPO or something. So how do you approach building a thesis around? How do you guys do that?
Yeah. So I guess when I'm saying an investment thesis, I mostly refer to the thesis surrounding the market and the product and the team. So we're an early stage fund. So usually when we meet entrepreneurs, we don't have much, but the founders and a smile. Basically, that's the saying.
The hustle, the ambition.
Yeah, they have an idea. They have the market they're going to operate in, but we usually don't know much else. The product they can pivot a lot throughout the way. Sometimes, occasionally, they even change the market. So how can you make a decision it's an informed decision based on so little? So there are funds that are more intuition-based, I guess, and less thesis-driven. We are not so much like that. We try to analyze everything that we possibly can before making an investment. And this relates to questions about the founders themselves, interviewing their recommenders, and spending a lot of hours with them before making the decision to invest. It also relates to the market, to the competition, who are the big players, who are the big VCs, the late stage VCs that invest in these rounds and in this type of companies. We try to gather as much information as possible, trying to understand this market and how what's the balance between the different players, where can you add value, and where the markets are pretty much
saturated.
Yeah, saturated. And then there's the question of technology, and because Grow Ventures is more of a tech-oriented fund, we define ourselves as not exactly deep technology, but pretty much we only invest in companies that have a significant technology to them. We also do a lot of due diligence on the technology part. We have a very wide network of people who are experts in all of the domains which we invest in, and we reach out to them before we decide to invest in order to learn whether this is like really, and if there really is an innovation or tech mode in this idea. And then we make the decision. Obviously, it can change, and it does pretty often. A lot of times what we thought at the beginning turns out to be very different 1 year in, 2 years in. But that's the part, of the game. You can't make risk-free investments in, venture capital.
So what happens in that scenario? What happens in those type of situations, right? You're investing in an idea, okay? You're super excited. You're backing the founder. You're putting a lot of your personal connections, efforts, time into this. And then 2 years later, you're seeing that the market has shifted, right? There is no place for that specific product, and then usually the startup will try to pivot, right?
Yeah.
But even if they try to pivot to something that you guys don't recognize as an ideal move, do you guys just drop them? Do you guys just kind of focus on other companies in your portfolio? What is that like?
No, of course, no. we don't drop them. Obviously, when we reach such a point where the decision to pivot is made, it's usually after a lot of discussion with the board and a lot of a validation process and due diligence on our part and on all the founder parts. We usually see ourselves as partners of the founders, and if the founders, the CEO, the CTO decide to make such a move, it's usually they have our approval and ever our help doing it, and we take under consideration that when we decide to invest, we don't really know the full picture. We usually invest very early. We invest in oftentimes in markets that don't really exist yet, so we understand that. We understand it's part of the process, and we will try to help them as much as possible. Not dropping them at all.
So I just want to say, there's a lot of VCs that say they're not going to drop. They don't drop. They still sit on those board meetings and everything, but they just don't put in the hustle as much.
Yeah.
I'm not saying it's the case with you guys. Obviously, it's not, but it does happen in the industry for sure. Let's talk about founders a little bit.
Yeah.
Okay. I will tell you what my thesis on founders is. Okay. And remember, I'm on the operations side. I work with tons of entrepreneurs from seed level, pre-IPO. We haven't even have clients who made exits, and I am a big fan of what I call the rockstar entrepreneur. Okay. I'm a big fan of the Adam Neumanns. Mm-hmm. I'm a big fan of
the big personalities.
The big personalities. I'm a big fan of Travis Kalanick, who was in Uber. Mm-hmm. I'm a big fan of of Elon Musk.
Okay, the troublemakers.
The troublemakers. Yeah. So I tell you why. Though. Ryan Breslow is another one. He's not a troublemaker, but he's another big name that needs to be there. Basically, it's this: to build a startup is incredibly hard, especially if you're building a product that hasn't. You're building the market that nobody knows about this market anymore, right? Mm-hmm. Let's say what Adam Neumann did with WeWork. There was no branded real estate commercial company, right? And the only way to do that is to have this guy who is super ambitious, super hustle oriented, super charismatic, that can go through and kick those walls and move that mountain. That's what I think. A lot of the times we've been seeing more of those silent entrepreneur types, and usually if they don't have an incredible product or something that's super innovative, I find that it's a bit more difficult for them. What do you think?
That's an interesting question. It's I also have this theory about prime ministers that you have to be a little bit crazy to say I'm going to become the prime minister of this and this state and rule over everyone. You can't be a completely ordinary guy to do it, right? So it's a big question, the type of personality that a founder needs to have. I'm not sure actually. I completely agree, that this is the ideal type of CEO. It definitely helps, but I think the most important feature or characteristics in founders in general is, grit and stamina. Like not giving up, not being afraid of hearing, no, and not like realizing that it's a long journey. Eventually most of the companies who reach an IPO do it like after 10 years. And this is what we aim, this is what we want for our companies to go on NASDAQ and be super, super huge. And that takes time. So you need to have like not necessarily this, crazy personality, but more of like strong-minded, eyes on the prize kind of person to do that, and that can look like very differently between people, I think.
Another thing that is related to this that I'm really interested to hear your take in it. From someone who's sitting with founders almost every day and getting tons of pitches, right? Mm-hmm. Let's take an Adam Neumann, for example. Okay. We see what the media is saying. We see what they try to say, but we still see that other VCs like Andreessen Horowitz are putting big bets on him again. Now I can tell you what I hear from private conversations with VCs.
Interesting.
In private conversations with VCs, everyone, I mean like 95% are telling me, of course I'm gonna put money on him again. He's an unbelievable entrepreneur, mm-hmm. right? But the media tries to portray those characters, that Elon Musk, that Travis Kalanick. It's trying to make them seem like they're troublemakers, right?
Yeah.
But in the end of the day, they took an idea from nothing. They made a lot of money for most of the investors, maybe not for the ones who invest, the ones who invest as pre-IPO, right? But I'm wondering, like, what's your take on that? Let me just like sharpen this question. I'm specifically asking, what do you think about how the media portrays what's going on in tech and talking about those founders to what's actually going on?
Okay, that's an interesting question again. I think that, as a general rule, the media overhypes and, takes out of context most of what we see, right? Otherwise, it wouldn't be interesting. So I think there is truth to that, to what you're saying, that trying to like dramatize everything that's basically going on, and not just in tech, in everything, like politics and local news. And if it's not super dramatic, it's not that interesting. Having said that, I think that I don't know Adam Neumann personally, obviously. I don't know like what would be the considerations to. He never pitched me, right? maybe he has this sort of magic to him that you just can't resist. I think at the end what he did was very impressive, as you said, like taking an idea and turning it into a few $billion company is not a small feat for anyone. It's a very impressive. Just very impressive in general, like not like without discussing the details. For me, I guess I would ask like, what are the signs that this is actually like not an overhyped situation again? Like this, I guess this is what I would ask if I was in the room and it was pitching to me. Mm-hmm. Like, is this real, or is it just your or is a lot of it is your charisma and charm? How much is it like the charisma, and how much is like a real and amazing idea that you can actually achieve? I guess these are the questions that I would ask. But
I've been seeing a lot of VCs that sit on the board, try to aggressively take on conversations. Usually, for people who don't know, the board is like, every board looks different. I'm sure every board looks completely different. There's a complete vibe to every board. It really depends on the people that's in. It depends on how the equity is divided. It depends on how big the startup is. It even depends how much the revenue. If there's a good traction, if there's good ARR, then the board meeting will go more smoothly. But I'm actually interested in that as well. But I'm really interested to hear your take on what's the difference. what makes a board healthy compared to a dysfunctional board, especially in those really early stage Series A startups where there is like, you don't really know, right? You don't really know if this startup is doing good or not.
Yeah.
You know?
Yeah, I think that there you can find like general guide. You can find general guidelines for that. I guess, and again about the thing about Grow Venture is that our legacy is a legacy of founders. We have our founding partner Dov Moran is like the inventor of the USB flash drive.
Yep.
He's an inventor. He's a founder in himself. He's an entrepreneur at heart. We have Lior Endelsman, which is the founder of SolarEdge, like the biggest Israeli company to ever exist. And they are both of them, like they're very tuned in to the entrepreneurial spirit. We don't really see ourselves as like these sharks, VC sharks type. We try to see ourselves as like partners to the journey and not like trying to force our opinion on the founders, because I guess this is just the legacy of our VC. I can say that for a healthy board, I would expect the founders to be very clear about what's going on. I see that boards that were the founders, they start with the bigger picture. This is where we're at, and then go into details. Usually have a better clarity among the board. They usually just receive a better clarity among the board members, and it makes things so much easier. I've never been in a situation where like there were shoutings and no, I want this and no, I want that. I was never part of this situation. It's usually very calm and fun in a way, because I would say that we're all very much in love with our entrepreneurs. That's why we chose to invest in them. So usually for me, like the situation is very positive and not something that to be dreadful of. But
like if let's say you invested in a company, early stage, right? You invested in that company, you're 6 months in. Is there a general framework or infrastructure that you're looking to kind of validate? Like 6 months in, you want the company to have $500,000 ARR.
Oh no.
Like, okay. Is there some, because there are some VCs, and you should. I'm really interested in your take on this. A lot of these VCs have this thesis, right, where they're saying, okay, this company reached 3 million ARR. Boom! Now it's time for Series B. Right?
Yeah.
Now it's time for, they just signed Netflix as a client. Now it's time for Series C. Like, it's very robotic, right? Not very holistic. What's your take on that?
So I guess there are like the general benchmarks, right? You pretty much know for each market it's different, obviously, and for each industry like it differs, but you generally know when you should raise Series A, when you should go and raise Series B. But it's a case-by-case scenario. Like, I wouldn't recommend the company to go and raise their Series A just because they hit, the 1 million ARR milestone. If they still have, a lot of money left, if their focus now is on growth and not necessarily, raising capital. So I wouldn't say that there is a template to how things are done. It's more of a case by case. Each company is so different. Like, each company journey is different. Like, we have companies that have revenues from the very early days, and then we have companies that only started seeing revenue at a much later stage, and both are okay as long as we know that there's something going on. We know how it looks like, and we know that they are in talks in this and that, and we understand why it takes so long. So for example, we have companies that are in semiconductors and in the deep technology markets, and for those companies it's very different. It takes a lot of time to close contracts, and the contracts are so much bigger, so obviously it takes a lot of time. So each is a bit different. We're not too concerned about benchmark. We do have like a general idea of how it should go, but it's not as if we have this, alarm ring that says, okay, it's time for your B round.
Yeah, I hear you. It's interesting how so many VCs have like different ways of looking at this, and VC is a new industry. Like it's only like 20 years old, right?
Yeah.
It's like it's new. It's like private equity in general, but like VC where you're actually only investing in like tech and you're like looking for this 100x startup, right? Because you only so that's a very new industry, and that's why there's a lot of different ways to do it, right? There is this question about what fuels the VCs. What fuels the VCs are the financial institutions. That's the number one, and then number two is LPs, right? Personal high net worth individuals who put their money in VC funds, and now we're seeing with how the banks are acting up, and a lot of people, for them, they're happy with the 5% they're getting in the bank, right? How is the relationship with LPs right now with this market correction?
Okay, yeah. So again, for each venture fund, it's really different. There are VCs that only have like 2 or 3 LPs, and there are other VCs who have like a lot, and like the relationship with them, I guess from the very beginning, it's a very personal relationship. We wouldn't be able to raise capital if they wouldn't trust us and see that there is value in giving money to us, so that we can actually make good decisions, good investments, and actually help our funders grow. So I think there's a healthy amount of trust between us and our LPs. They see it as a journey, like as a marathon, and not
Not a sprint.
quick. Yeah, and I think especially so in funds like ours, where we invest in like deep technology, and there's an understanding that it takes time. It's not like a quick exit, like 2 years and done. It takes time, and I think there's an understanding that like it's a wave, and if we're done now, it's going to be better like in a year or two. Not too much, stress about it.
Okay. Some final questions for you. Okay, so this is a curveball.
Yeah.
This is a tough one.
Okay.
In 2022, we've seen a lot of on the paper stuff. We've been seeing, both entrepreneurs, founders, and VCs kind of talk about how well their fund is acting up, right? Look at how they're doing. But it was all on paper, obviously, right? There was no... And now with the market correlation, we're not seeing that anymore. Nobody's talking about it on paper. We've also seen secondary, right? We've seen this new thing where founders that are 7 years in, and they have a really high profile startup, they're starting to sell shares, right? They're starting to already benefit from that. Do you think this is a mistake or a coincidence of such a big bubble? Or do you think, 2 or 3 years in, like in 2020, 25, 26, we're going to still see more secondary stuff going on?
Okay, so I think we saw a lot of weird moves a year or two ago, like secondary is even like at an A stage, or like at very early stages. Again, each case, is different, and everyone has very good reasons. But I think overall, what's happening now, I think it's healthy in a way. Everyone are coming to the table much more humble, both the VCs and the entrepreneurs, and like there's this mutual understanding that what was a year, 2 years ago, is not what's going on right now. Let's take a deep breath, calm down a bit, and see how it plays out. Yeah, but overall, I think it's healthy. I think like a bubble is never too. It's never too good. It's like there's like a lot of waste going on and like spending and it's okay to an extent, but overall, I think we're going to see much healthier companies, growing up in this next couple of years.
And secondary is coming again?
It will take some time, I think.
Okay.
Maybe later on. It's hard for me to see it right now.
But does it need to be a hype bubble for secondaries to happen or not? Can there still be a healthy market with healthy investments with secondary involved?
Yeah, definitely. I don't think secondary is a dirty world,
Mhm.
right? I think it actually could be very healthy if you want your entrepreneur to, run the distance, and if he's, a bit tight with a bit tight with cash, and he's getting, acquisition offers for like selling at a low price, and you want to help him like, stay the course and see how it goes instead of selling too quickly. It's not necessarily bad. Obviously, you need to make sure that the motivation to stay there is not, corrupted, and like there's still reason for him to or her to still be the CEO of the company and like not, bail out. But it's not necessarily like a bad thing to do a secondary. Just it really depends on the timing and the situation and like why the motivation for the secondary.
Mm-hmm. Tal, you've been super helpful in this conversation. I want to do a quick fire questions.
Oh, okay.
Okay?
Let's try it.
Let's try it out. You just answer one with one or two words or whatever, but but really say what you think, okay? First question. What book has impacted you the most?
Oh, wow, that's a tough question. I don't know. I read a lot of books. When I was younger, I read Ender's Game, and it was very influential on my like overall personality, I guess.
So that one.
Yeah.
What's a productivity tip that you go to?
Write everything down.
Everything.
And make lists.
Make lists.
Mm-hmm.
Do you manage your day on the calendar? Do you manage it on just lists?
Calendar and lists everywhere. Like my table is filled with lists.
Really? Like written down?
Written down, old school.
Old school. Nice. What is your favorite industry? Like vertical. What's your favorite vertical in tech?
Oh, no, I can't choose.
You can't choose?
No, I have too many.
You have too many.
Yeah.
Okay. Okay. And this last one, I don't know if you're gonna answer this, but
Try.
who is the person you would love to have lunch with?
Alive or dead?
Alive?
Oh.
Because maybe he'll be hearing this. Maybe.
Oh.
Hopefully, I don't know. This is going to be in a lot of big publications.
Oh, wow. Can I be like a fangirl a bit? I would
Yeah.
love to have like lunch with Taylor Swift.
Nice.
Yeah, I think she's an amazing businesswoman, and like she did something pretty incredible, like with her comeback, and I'd love to
To take her to lunch.
Yeah.
and learn from her and what she.
Yeah, she received a lot of hate like not too long ago, and she just rose from the ashes and become this multi-billion industry of one woman show, and I think that's pretty incredible.
I love it.
Yeah.
I love it.
I was not being very cliche here, I think.
Not at all. Not at all. Tal, thank you so much.
Thank you. Thank you for having me. It was fun.
Thank you.